Welcome back to Stocklabs for another market recap. Just wrapped up the third week of August on the 19th, and we're coming into the final full trading week of August before before the summer trading period is kind of over. Once we're into the early September, then all the so-called professionals will be back at the desk. So it was a pretty soft week for markets. We were kind of expecting that from the prior recap, just some pullback type action for this past week, which you could more or less say that we got. Basically, the markets kind of topped out Monday, Tuesday, and slid lower the rest of the week. And kind of closed down near the low, down basically on the lows of the week by Friday. So S&P was down 1.1%. Dow was basically flat. Q's down 2.2%, and IWM down 2.8%. So not a disastrous week in the context of kind of the rally that we've enjoyed in over the last couple months, but a soft week for sure. And it'll take a little bit of work to see what the market is really trying to do here. Back to our leadership stocks, they were also predictably falling alongside the market. Apple flat, Tesla down 1%, underperformer Meta / Facebook down 7%. This was they were a big outperformer in on either the prior week or the week before, but they're sort of giving that back. I mean, they've been a terrible stock for 8 or 9 months at this point. Nvidia down 4.5%, Amazon down 3.7%. I mean, they're kind of they're softer than the overall market and the Nasdaq, but nothing too crazy. Just general weakness alongside the indices. From a breadth perspective, it was not really that encouraging. I mean, you see general softness everywhere. Tech and healthcare underperformers. Remember, this healthcare trade really looked like it was turning around. I think around the start of, around June, July, the healthcare trade was looking like it was going to reverse the year plus bear trend. But now you're starting to see some of these weeks where healthcare is becoming a big underperformer again. And tech down 4%, median tech stock down 4% is worse than the Nasdaq, which was 2.25% or whatever down. Utilities, the only green-ish sector, up 0.4. You see XLU is near all-time highs, so utility is definitely a safe haven trade for the time being. And okay, we have no subsectors that are up 5%. So really weak upside breadth for anything that even was up. And on the downside, we have a lot of stuff. So 25, 6, 7, 8, 9, 31, 2, 32 sectors down 5%. Not egregious, but also coupled with the fact that there was nothing on the upside, you could see some distribution was going on this week or this past week. Worst performers: EVs, nukes, silver. Okay, you see gene editing, part of the healthcare trade, drugstores, same thing. Pretty broad list here of sort of downside sectors. So if we look at breadth from a market cap perspective, 1 to 5 billion market cap, down 2%, 5 to 10 billion. This doesn't look right. Embark. The stock split 20 to 1. We haven't adjusted it yet, so let's just remove it from the list. Okay, 2.84% on the downside, 5 to 10 billion. 10 to 50 billion, 2.4% on the downside. 50 to 100 billion, down 1.6%. I mean, pretty uniform stuff everywhere. And Terra Caps, 100 billion plus market caps down 1.1%. So, yeah, you see the breadth was kind of mirrored from the industry perspective too. It's just general selling across sectors and market caps. Again, the market didn't pull back too badly, but it was definitely more of a selling week than a buying week. Especially coupled without seeing anything on the upside in our industry, in the industries. You could maybe say that the stance of the market has shifted a little bit, but it's still early. It's only one down. It's only one down week. For intelligence this week, for the coming week, okay, we have a couple things on here. UPRO, Ultra, S&P, SPXL is the same thing. 3x bull S&P. Natural gas, which has been on another big run. Gush, oil and gas explorers, and LABD, Bear Biotech. So, yeah, this would, it would kind of be odd to see the S&P rallying alongside, while biotech is selling off. But, there's a lot of stuff going on. So, sectors trade somewhat independently from each other a lot of times. If we reverse this, less than or equal to -4. Okay, not much on here for downside. FAS, so bear financials is bear, so that's bullish financials, and bearish VIX is bear, so bullish VIX. Right? Yes. Okay, sorry. Okay, so that would be odd to see the VIX rallying alongside the S&P from the prior screen, but maybe it'll be more of a choppy week than anything, as opposed to one that has a dominant direction. Yeah, so S&P is bullish, but the VIX is also bullish, and then biotech is bearish. Oil and gas is bullish. Yeah, I would expect more of a choppy week than anything based off of a lot of this, especially with how the prior week closed. Expect the first half of this week to be, to sort of follow through on the weakness, Monday, Tuesday, even into Wednesday. See some more downside in the indices and stocks. But I would also expect that to turn around and start to put in a little bit of a rally back up towards the recent highs by the end of the week. At least maybe if it's not there by the end of the week, but to sort of be on its way into sort of the month end kind of markup that you see a lot of times. Overbought, oversold. You see like these overbought flags sort of came in around 15th ish, 12, 13, 15th ish. We're pulling back some, haven't gotten to oversold yet. It's been a while since we had any oversold actually since May. Um, Most likely we won't get all the way down to oversold this week, although we could, but it's just not something I'd be expecting. And yeah, seasonality. August is typically a do nothing month. So I think we're up. We're still up for this month, but following the most recent little pullback, it's not anything spectacular. So if we pull back quite a bit, if we pull back another week, if we do another week like the past week, then we'll basically be kind of flattish for the month, and this August seasonality will have played out kind of how it historically does. But any one year doesn't have to match the historical average. So yeah, that's pretty much it. I'd look for more softness, at least in the first half of the week, followed by, kind of a bounce-ish attempt. And then we'll see where we end up on Friday. We do have, I think the Fed has the Jackson Hole meeting coming up. I don't know if it's this week or the following week, but it is something that people are looking forward to already. So, investors will be positioning for that leading up to it. And yeah, we'll see what Jerome and Fed have to say about the current state of affairs and their policy and all of this stuff, and expect that to generate some volatility in the market. But as for this week, at least to start, yeah, dip, then bounce-ish, and then we'll see. Take it a few days at a time. So thanks for tuning in. That's all from me, and good luck out there. Enjoy kind of the tail end of the summer, and yeah, talk to you next week.